Can ICT really be used on stocks as well? That's a question I get a lot in the DMs and from my private students. And the answer is yes. You can use ICT for stocks. But now the question is how? ICT is a trading language. A language you can speak to the market to better understand how it's most likely going to move. And how you can use stocks is, first is, what are the stocks? And the stocks are bundled together in NASDAQ, ES, Dow Jones, or the Nikkei, the DAX. But let's talk about US stocks in this video. So if you want to use ICT concepts, let's go over a few pointers you need to use. If I would trade stocks, individual stocks, I would definitely use NASDAQ, US 100, and S&P 500 ES for higher time frame buys confirmation. Because let's say the NASDAQ is going up. That means all the stocks that are inside the NASDAQ are going up as well. Most of them, because the NASDAQ moves as a combination of all the different stocks underneath the NASDAQ. Same for the S&P. So now you know that. Cool. Let's put US 100 and US 500 on the watch list, because you need to use it for your higher time bias. Second pointer is, if you trade stocks, don't trade penny stocks. Like, for ICT to work, you need to have liquidity. I would say in general, because otherwise you can be in a pump and dump scheme. You don't want that. You want a predictable price action, and predictable price action happens on stocks that have a lot of liquidity. So no penny stocks, ideally the one inside the indices. Inside the indices, I mean, that are listed on NASDAQ, S&P, Dow Jones. And you can make money, very simple. We're going to use the basic ICT concepts. We're going to use liquidity, we're going to use market structure, we're going to use fair value gap, and we're going to use order blocks. And you can make all your money only using the weekly and daily time frame as your higher time frame analysis. And for execution, you can use the 1 and the 4 hour. This means you can swing trade it, you can also intraday trade it, and you can even scalp it. So now, using this knowledge, this framework, let's go over a few examples. And I was looking at the 3 stocks from the NASDAQ to see, like, hey, can we use this concept on, let's say, Apple, NVDA, and maybe a smaller one, Bank of America. Let's go over these one by one. Starting with Apple. If we look at Apple, let's point out what we see. And we can go all the way back to, let's say, 2024. And I'm on the weekly time frame right now. So what I see here is a liquidity sweep. Then I see displacement. There's fair value gap. There's no rebalancing in this fair value gap. So let's see if we can find on the daily. See some rebalancing. And there's almost no rebalancing. So you would have missed this move. And you see many gaps on the stocks. Why? Because the stocks are closed lots of time. The stock market opens at 9:30 EST. And between the days, end of day, and the stock market opening, we have always had that little gap. So it's more normal to see like these kind of charts on the stocks. If you trade indices or Forex, you're not used to these kind of gaps. So here I see value gap on the daily. Cool. So liquidity be taken out, displacement higher, and this first value gap is mitigated. Well, there's here down close candles that trade into the fair value gap. That's an order block. Cool. Let's mark out the order block. Right there, and you see how price comes back into that. And I'm doing this on the daily. So if you do this on the daily, using this concept, you can dive to the lower time frame to find your even lower executions. So order block taps into it. Because we have a down close candle that taps to another order block, we can use this as well for an order block. So order block, and you see how price taps it before we go higher again. Awesome. Then it trades higher. Then it rebalances here and goes up and up and up. And then you have that massive sweep, that massive downsell in July 2024. And where do we stop? Do you think it's random? Here comes the ICT concept. Again, in an order block. Of course, we are in this massive fair value gap. And this is not very special. Like, this happens on the Forex, this happens on the indices, it happens on all the asset classes, these kind of price action. So first, we're not trading back into discount, not trading back into like deep retracement here. We're just going because we're very bullish. But once we start breaking down, we want to start breaking down, and we want to take sell side liquidity. Example here. These lows are taken. Where do we stop? At the order block. Cool. Using a recent price action, we can just go back to the weekly. How could you trade this? Well, if I see here in December 2024, time recording is April 2025, I see this on the weekly, and we trade back into a weekly for value gap. That's awesome. So mark this out. So here, in these weeks, you could have shorted Apple. So we displaced lower, retraced, and go lower. If you missed that move, because ideally you not want to short the first for value gap, then this was your entry, right here. You go to the daily, this on the weekly. On the daily, you see even more entries. So from this weekly, I see another. I'm only using for value gaps here. We can also use order blocks, but only using very simple for value gaps order blocks. That's all you need. So for value gap, we trade into it here on March 3rd. We trade lower. There's an up close candle that trades to an order block. Not an order block, a for value gap. Up close candle trades for value gap. That is a bearish order block. Cool. And you might wonder, but we trade up. You see that the bodies are not respecting it, but they do, because you want to look at the mean threshold of an order block, the 50%, and the bodies are respecting the 50%, so you're still good. If you want more information about order blocks for value gaps, liquidity, all that stuff, there's a dedicated video on the YouTube channel explaining every single concept in detail. Then we trade lower from there, from the order block, trade lower and lower, creating another for value gap, and this is that other weekly for value gap we marked out. Let's go back to the weekly. Right there. See how clean price moves into the fair value gap. Also on the daily, we have fair value gaps here. And we start breaking down lower again. So in this move, you could have taken at least 3 shorts just using daily and weekly fair value gaps and order blocks. I think that's pretty awesome. Cool. Now looking at NVDA. So we did Apple. Let's dive a little nitty-gritty. And this is all in hindsight, guys, because that's the reason I can explain it the best. Look at here. We took out the August 2024 low. And we have a weekly bearish fair value gap. So once you see this candle, here is where you can use ICT concepts to frame a bias around. Why? You can play external range liquidity in old low back into the range into internal range liquidity, a fair value gap. And it's on NVIDIA, guys. This is stocks we're talking about. So if someone says stocks, well, ICT doesn't work on stocks, they're wrong. They just need to analyze better. Cool. So let's just dive to the 4-hour time frame. Let's see what happens. So we want to frame an idea once we take the low back into the range. So let's see what happens. And don't be confused about all those gaps. That is because the stock market is closed until 9:30 every day. So when the market closes, I think, was it around 4? Let me quickly check. 4, yeah. When the stock market closes until 9:30 the next day, it's closed. So you see those gaps. The stock market almost always gaps, so don't worry about it. Cool. So what do you see here? 9:30. We take liquidity and start moving higher. Let's see if we can find a fair value gap. I don't see a clear fair value gap here in this range. What I do see is, of course, a down close candle here, what we can use to trade higher. But I would say there is a fair value gap here. There's one here. Look at that, how when we tap into the weekly bearish fair value gap, then we move back into the range. So here in this move, intraday, you could have taken a short. See if there's more price action coming. This is live pricing weekend, but I'm expecting price from this point. In hindsight, you can watch it right now. Like you will watch it after I recorded this. I think next day we will take this low, this high. So we play in. This is on a 4-hour time frame. And why I think we're going higher here? We took liquidity. This is on a 4-hour time frame. Let's dive to 1 hour after this. Then we came back into the range in the weekly bearish fair value gap. Then we came back into the fair value gap and order block here. Look at how we respect this order block. It's beautiful, beautiful. So here, from this point, I'm expecting price to reach back into this high. Let's see what happens. And even, what I like to do is, once we trade into like a weekly liquidity pool and we see displacement, I'm open to go lower than the 4-hour time frame. I'm a swing trader, intraday trader. I also like to scalp, but let's say you do 1 hour time frame. Let's see if we can frame more setups around this. So these are all the 4-hour levels. So we take liquidity, right here, 9:30 candle on Monday, April 7th. And what's the last down close candle that made the low? That's this one. That's an order block. So let's mark it out. And see how price here comes back into the order block before moving away at 9:30. And once it's moved back, look at that small gap here. We don't trade into it, so that's a shame. So here you would miss that sniper entry. That's part of the game. To then trade higher again. So this 9, I think this was the tariff, because it was the most insane candle the Nasdaq or the stocks ever got. I think it was the tariff release from Trump. This big candle. This is a rarity, but we still gonna analyze it like we used to. So we had that massive expansion, but then we retraced back into 1 hour for value gap, 4 hour for value gap. So here on Thursday is a very nice long entry. And you would have taken some nice money here as well on this move as well. You can dive even lower and lower and lower. Not going to bore you with that on this video. I don't want to make it too long. But back to the question, can ICT be used on stocks as well? Yes. And you give all your money weekly, daily for analysis and 1 or 4 hour for execution. You saw this here on Apple and NVDA. Let's do one more. Bank of America. Similar price action. What do I see here on the top? For the shorts, I see for value gap 1. It's on the weekly time frame for value gap 2. So here as well, you could have used this as for short territory. But now you're like, okay, but Dion, this looks exactly the same as NVIDIA and Apple. Yes, that's the fucking point. Because if you look at the US 100 on the weekly time frame, it moved exactly the same. And that's what you want. Like if the US 100 is going down, when you see this happening on the US 100, you want to look for the individual stocks and find short ideas around that. Cool. So for value 1, for value 2, this is Bank of America, a smaller stock on the, well, smaller than Apple, than NVIDIA on the Nasdaq. And if you want to know what's in the Nasdaq, just go to Nasdaq.com. Like I did like a Google search, like, yo, what's in the Nasdaq? And then give all the stocks. And I picked like a random Bank of America here. You can use it on every stock. You can also go to the S&P. Just Google what's in the S&P, what's in Dow, whatever. Cool. So here's, well, you could have taken some short ideas. Let's go to the 4 hour. And let's stick with our short ideas here, how you can refine your entry. There was the weekly for value gap. Let's ignore this for now. Only using the 4 hour. Let's see here. 4 hour for value gap. Inside this 4 hour for value gap, we have a turtle soup. A little liquidity sweep inside a key level before moving lower. Then I see another for value gap here. Look at how the bodies are respecting this for value gap. The wicks do the damage, the bodies tell the story. So this could have stopped you out, but if you have shorted this move, ideally your stop loss is protected by this high, because when you have a turtle soup, this is a high versus this high, this should hold, and of course you see that as well. So the bodies, you see how perfect that 50% respected here. Also the order block, up close candles. That took liquidity, you can use a series there. So I would also mark this as a bearish order block. And then we trade lower. Cool. Then we have the series up close candles. The trade lower. Doesn't connect very well here. Well, I see this massive order block, or a massive for value gap. I would say we can even frame this from here, maybe even higher, but let's say this for value gap starts here at the top of this wick. You see how we tap into that like a little bit before crashing down as well. So once price comes here, there's where you need to pay attention. Well, let's analyze even more. Once we hit that, we displace. I see another for value gap here. See how just using 4 hour for value gaps, and we can do the same on the 1 hour. You can frame so many entries around this. Cool. And I think now we're looking at live price action. Oh, no, not yet. Cool. We can still analyze. That's great. Well, another for value gap. So this means this is a 9:30 candle. You can trade the open here. For value gap, you would have a massive short. Awesome. Well, next day, you can take your short in this before moving lower. And of course, this is the tariff stuff. I guess, yeah. It was like a crazy down move. So maybe you've missed this short, which is fine. just fine. You will miss moves. But the point I'm trying to bring here is that just using the simple ICT concept to use the NASDAQ and the S&P, let's say you're trading a NASDAQ stock, use that as your higher time frame. Let's say bias, your confirmation. If the US 100 goes up, the NASDAQ goes up, your NASDAQ stocks will also go up most likely. And maybe it's a nice idea to then look, okay, which one is then the strongest? Maybe there's some other news coming out. And just like you use, let's say, for example, news, the red folders for Forex, indices, all that stuff. The red folders like CPI or FOMC or NFP. When you're trading stocks, keep in mind that stocks also have earnings. Of course, the earnings will also reflect on the NASDAQ, but the individual stocks, let's say Apple or NVDA. Let's say NVDA has earnings. Don't trade before the earnings. Why? It's a big red folder. Don't do it. So maybe we can even add that to the framework. So now we know, okay, we can use ICT concept on stocks. That's awesome. We know we use NASDAQ and ES for high time confirmation, trade stocks to liquidity. And let's do one more framework. Don't trade before red folders for stocks, especially the earnings. And there you have it. How to trade stocks with ICT. If you like this, make sure you press the like button, you subscribe to the YouTube channel. And if you want dedicated videos on liquidity, market structure, ICT in general, go to the channel. There are so many videos that will explain every single concept in detail. Thanks for watching, and I'll see you in the next one. Bye-bye.